Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Market Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month lead and tin. I'll start with LME 3-month lead. I have prattled on and on about how great a comfort has been, how the market has kept within the broken May to October 2020 bullish shift pitchfork, originally drawn easily over a year ago. To recap some of the recent significant actions, late September saw a halt to a decline, stopped dead by the lower time, currently 22.12, of this same broken May to October 2020 bullish shift pitchfork. However, 2 weeks ago the market breached and properly broke the combination of the lower time plus the slowly rising long moving average, currently at 22.71. Indeed, this was a serious break lower, with 3 consecutive closes below the lower time. Yet the market did not pour further down. I suspect that this was due to one factor, and a self-fulfilling prophecy, or action if you like. The one factor was the 50% Fibonacci of the March to October 2021 move at 21.80. This stopped the fall dead. What turned it around and back up were the daily indecisive doji crosses made 3 weeks ago, and especially the indecisive doji cross made on Tuesday last week. Significantly, it was immediately following a large bearish engulfing pattern. That was enough doubt to cause the bullish closing long white Mariposa last Wednesday as a follow-on that brought the long moving average back into play, followed by the bullish hanging man patterns on Friday and yesterday. Thus we are back within the congestion from December last year, between about 22.63 and 23.31. This now brings in the upper time of the more recent October 2021 to January 2022 bearish Andrews pitchfork. That's currently at 23.25. Brings that into play. This bearish pitchfork had seen the middle time, currently at 21.68 through, though a bearish time still slowed the decline 2 weeks ago. Maybe, just maybe, this pitchfork will now be paying for that effort. There is one other question I'd like to throw open. With the recent actions, is the mid-October 2021 today action a possible double bottom? It's in the wrong place, I give you that, but there are definitely elements there of that pattern. I'll leave you with that thought. It is derived actually from my last commentary, and it deals with psychology of testing the now broken lower term, and I quote, "Take special care over this, as at least 2 consecutive closes below this lower time, probably more in actuality, would be needed to break it. The market tried back in late September and failed. Just take care." End of quote. It may well be that the move lower was a trap, and last Wednesday it was sprung. Thus we are back where we started at the beginning of January, in a bullish frame of mind. Please remember this also from last time, and I quote, "This broken May to October 2020 bullish shift pitchfork that has been so effective at guiding the market higher is still, after all, a bullish shift pitchfork. And until this bullish pitchfork is truly destroyed, then it will still guide this market higher all the while." This statement is still valid. LME 3-month tin. I'm sorry if you've heard this first bit before, but it is so necessary, I'm afraid. So here goes once again. I've been repeating this bit again and again now for almost a year. It is this: the overall bullish incentive is still alive, well, and strong here. This was and is because of the original move up within the January to March 2021 bullish shift pitchfork that started back in March last year and then translated to a higher level in April 2021, resulting in prices moving up over the middle time, currently at 41.290, of this bullish shift pitchfork. Prices even managed to reach up and over the upper time, currently at 43.670, back in July, August, mid-October, mid-November, January 2022, as well as each of the last 3 weeks. Yet in all that time, the market has always tended to come back within the folds of the same bullish pitchfork. In all that time since March last year, this bullish pitchfork had, and still does, drive prices higher at its own pace. Now, admittedly, I, and I'm sure you as well, believe that no market can head in one direction all of the time forever. Though this metal is is giving a pretty good impression of such a market. This is why we saw major corrections back down in August, late September, late October, and even 3 weeks ago. Yet it's important to note that despite these corrections, the market in all its pullbacks down has never ever managed to break this same bullish incentive that's been here since March. The evidence for this can be seen by how this market is still today within this bullish pitchfork, shift pitchfork. Now we are currently moving up and are testing the upper tie and above. It's currently at 43,670. Another point to note, and this may become very important, is if the lower tie, currently at 35,475, is challenged, then one should take into account how this lower tie has been married to its long-term partner, the rising medium moving average, currently at 39,005, since at least August last year. It may well be that if we see a separation of these two between the lower tie and the medium moving average, then perhaps, only then, may we start looking at the bullish incentive as maybe finishing. This is no more than a conjecture on my part at this time, but it does have a certain symmetry to it. So I suggest special attention to those two. However, the most recent action indicates yet another possible fresh attack on the upside, with a new and seemingly valid and more acute January-based bullish shift pitch seeing good work between the lower tie and below, currently at 42,975, and the middle tie and above, currently at 44,795. This is something to also watch, as it has looked very good corralling the market higher during the last 3 weeks. This brings me once again to my final point, the same final point which I've repeated now from previous commentaries many times. It is this, and I quote, "It can be hellish to rely on only one pattern, because it'll be hellish when it breaks," end of quote. So that's it. That is where we are now, once again. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.